In today's video, I'm going to teach you how to use IC Markets Margin Calculator. Before we click around, here's a quick refresher on what margin is and why it matters. Margin is the amount of money reserved from your account to open and hold a position. Think of it as the collateral that keeps your trade active. It's determined by the instrument's current price, the size of your trade, and your account leverage. The core formula IC Markets uses is straightforward. Margin required equals current market price multiplied by volume, divided by account leverage. For example, a zero point 0.1 lot EUR USD trade at a price around 1.356 with WAM 400 leverage would require roughly $33.91 in margin. The calculator does this math for you instantly. To begin, head to the Forex Calculator section on the IC Markets website. This hub includes tools for margin, pip value, and more. Depending on the layout, you might see a dedicated margin calculator or a combined tool with multiple tabs. Once you're there, choose the margin calculator or switch to the margin tab if the calculator is combined. This ensures the results you see focus on the funds needed to open a position, rather than pip values or commissions alone. Now enter the key inputs. Select your currency pair, like EUR USD or GBP JPY. Pick your account currency, which is the currency your trading account is denominated in, such as USD or EUR. Set your leverage to match your account, for example, 1:100 or 1,500. Then enter your trade size in lots. Remember, one standard lot equals 100,000 units, 0.1 lot is 10,000 units, and 0.01 lot is 1,000 units. If your account currency differs from the quote currency of the pair, the calculator will typically handle the conversion automatically. After filling the fields, click Calculate. You'll see the margin required, which tells you how much of your balance will be tied up to open the trade. Many times, the tool also shows commission, pip value, and related metrics, which are helpful for broader planning. Use the margin figure to check if you have enough free margin before placing an order. Let's run a quick example. Say you choose EUR USD with a lot size of 0.5, leverage of 1,400, and a price near 1.3500. The calculator will estimate margin as 1.35 times 50,000 divided by 400, which comes to about $168.75. With that number, you can confirm whether your free funds comfortably cover the requirement. That's it. Use the calculator to test different pairs, lot sizes, and leverage, and always confirm your free margin before you trade.